Why is Kering going up in 2025? Let's analyze it together. Read the disclaimer right here in the video description below. And also join us in ST. We analyze the most popular stocks in the US market and also the European market. The interesting thing about this stock, Kering stock, for those who don't know the stock, this stock is the Gucci brand. It's like the Laurent, is Saint Laurent. All these luxury brands right there. Kering it has a huge presence. And the thing here is like they sold an important business recently that is gonna help them, reduce the debt. But there are other news that we have to talk about to understand why it's going up right now. So another thing is like this stronger quarterly results, because we were expecting like really bad results. Last year we have a drop of -18% in comparison to the previous quarter. This year it was only 5% drop. So obviously we see, and it's not like a huge turnaround, but at least we see that something is slowing down. The downturn is slowing down, and probably in the next, at least according to Wall Street analysts, they're expecting better results in the coming years. So 2025 is going to be the worst year, probably one of the worst years of the company. But after that, things are going to, they're going to look better. Also, the leadership at Gucci turnaround helps. There's a new CEO, Luca Di Meo, and also they're gonna he's appointing a new Gucci CEO, Francesca Bellettini. The strategy right here that they have is to reduce costs. So obviously this is very important because they don't have a huge debt. I think they have other companies with like a very worse debt than this one, but at least they need like 4 quarters to pay the debt, in terms of utilizing the net income into the debt. So reducing the cost and reducing the debt is a key step, in order to see the stock going up again. It's very important, at least they should reduce the debt by half, by 50%. Also, they have to increase the sales, but right now the luxury market, it doesn't look good because they increased the prices so much that right now many people, they cannot buy it. They cannot afford it. This is the current situation, even though the focus of the focus buyer here, the key buyer of this industry is luxury, is rich people essentially. They also have people that they are not rich, but they make an effort and they buy something from this brand. Currently, those people, they are not buying anything because right now it's very expensive. It's maybe just a few, but less than before because they increased the price. They increased the prices like 50% in some cases, so that's a lot. So, apart to reduce the cost, we have to see the forecast because here we have this refocusing on debt reduction, the market sentiment valuation, because obviously we had to go down a little bit right here. We have to go even to a multi-chart, and you can clearly see we were trading back in April around 2013 levels. I mean, that's huge. 2013, even 2001. So this is a very key level, very low level. The downtrend was -81%. So obviously, those who like to buy the dip, that was it. That was a very good opportunity. So when do you buy a stock in this situation? Okay, as long as the stock is in positive territory, it's okay, it's not very dramatic. So you had to go to the net income, and you had to, for instance, we can add the semi-annual, and we compare. And we compare that, we were talking about very bad levels, but still positive territory, positive net income, which is important. So you buy it right there, and then when things go back to normal, which is 1.8 billion or something like that per semi-annual income, that would mean that the stock is in the right direction. But obviously, you're gonna buy it when that happens, because when that happens, probably it will be making new highs. This is the market. So you have to buy it before it happens. So we're gonna go to the forecast, and we're gonna exactly see what analysts from Wall Street think about it. So currently, it's a little bit overbought, and that's true. The rally is so huge because the current situation is not good. As you can see, the next semi-annual income statement is not going to be good. We're talking about 2.42 of EPS, so we're talking about like some of the worst level ever, not ever, but in the last years of the company. But after that, 2026, 2027, they're gonna look better than that. But still, buying the dip is very difficult because you can buy right now after this rally, and then we could see a retest. You know, it can go down again after this huge rally and retest the area, maybe not the 160, but at least 200 or 250. So if that happens, you can find a better entry. So you gotta be careful following these trends because it's incredible, but it's also very difficult, I admit, because normally I prefer to buy at the bottom, not right here or in the middle. Even though this stock could go up without any reason, logic reason, you know, because right here we are still in very bad net income. You could miss the trend, is the truth. You know, right now it's very difficult, but you have to buy at the bottom, not right here. It's better to do it at the bottom of the downtrend. So how do you find the better entry? You have to go to the RSI, MACD, and you go to, for instance, daily chart, even the weekly, because this is very long-term situation. And you go to the MACD and RSI and find these levels. So at this point, the best level to buy the stock was between July 2023 and June 2025. This is the oversold territory, as you can see, but very difficult to catch it right here, obviously. But so that's why you had to use the RSI as well. So this is a very picky one because you had to buy these at the very extreme levels, and these levels are the ones in red here in the MACD, right when you see that it's starting to go up. I say it's tricky because you buy it right here, you enjoy this little upturn, and then it goes down again. So for the long term, you have to buy right here and then at the second time right here, because you don't know when is, you know, the best one. You know, you're gonna miss the right one if you are trying to catch only one entry. So that's why you have to divide the entries at the bottom of the MACD. You know, right here when it starts to go up, these red lines that are, you know, a little bit darker, and you buy right here in this area that, you know, it matches the RSI, the very extreme level right here and right here. These are the areas that you need to find when you want to buy a stock. You know, you have to buy it after a correction, not in the middle of this rally, because this rally it's in completely overbought territory in the MACD and the RSI, and probably you're gonna eat a correction, and that correction is gonna be huge. So this is my opinion, of course. What do you think about this one? Do you think it's a good one for the long term? Do you think it's best to buy at the bottom or to buy it in the middle of the uptrend? Leave your comments below to, you know, to see exactly your opinion. Also, we're gonna see the seasonals because this is very important. The seasonals are gonna show you exactly the latest downtrends and uptrends of this stock over the last years. So I'm taking data from 2020 till today, and you can clearly see right here. Overall, the stock has had like very bad performance over the last years. This is like followed by this decline in sales in the luxury industry, which is normal. You know, these years are normal because of that. But in normal circumstances, you have to take data. You have to take data, for instance, from, let's say, normal years, not bullish, not super bullish, but normal years of the luxury industry right here between 2012 and 2018. And you can clearly see here the situation has changed dramatically. We're talking about no negative year, year in this between 2012 and 2018. And this is like the reason this is a buy, for the long term, because overall, in overall, this stock goes up. But you need like, the luxury industry working. If the luxury industry is not working, obviously you have to wait and find the best moment to do it. Probably it's gonna be between 2026 and 2029. It could be the next uptrend of the luxury industry, and then you can buy the stock. That's why this is one of the reasons they are buying right now, because they don't want to miss that trend. So overall, look at that. We're talking about more than 81% in one case in 2017, in 2016, another 40%, and then 25%. So maybe there are other better stocks. That's true. That you can find better entries than and better uptrends in other stocks. But the truth, this one is like a very good one. My market cap currently is 38 billion, and it could be better definitely if they focus on net income and reducing the costs and the debt. So leave your comment below and leave you also your opinions, and see you in the next video.